Holy crap. Has it been a week? We got inflation running off crazy. We are at all-time highs, literally 6.2%, over 8% on the wholesale. And you know, the markets are raging. They're going up. Crypto is going up. Everything's going up, including the real estate and the house you live in. But why is it that Warren Buffett and the other big money guys are dumping their stocks when you're buying? Well, that's what we're going to hit. And there's a lot more. So stay with us for What the F Happened. We'll be right back. Steven sent me some reports this morning. Brand new data. Check this out. Just released this morning before we went live. Inflation is at a 30-year high. Do the math, folks. 30-year high, 6.2%. And that's just the start of it. Literally, like, if you think that that's going to, taper or, it's transitionary, the government tells you bullshit. They lie to you every single day through the fake news. They tell you what they want you to hear because one day they say one thing, right, Stephen? The next day they change the tune. Oh, it's transitionary or whatever they call it. And then the next day, it's not. It's just like, what is it, guys? Is it real? Is it not real? It's real, folks. And not only that, inflation is 6.2%. In October, the core consumer prices were up 4.6%. Okay, we're only in November, folks. That's how fast inflation is running out of control. But, it's not even inflation that's a problem. And I'm going to have Stephen read this article here. It's the wholesale inflation. You might not know the difference, but here's what it is. If you went to a restaurant owner and you asked them, how much have chicken wings gone up in cost? 50% increase. The wholesale inflation is over 8%. Actually, chiming in this morning at 8.6%. Matching September's record high. The wholesale inflation is what we should be looking at if we want to gauge what's coming, because that's what the retailers, that's what the restaurants, the stores are paying. That's how much more the cost of the goods are, and that trickles down to you. Stephen, what do you got on inflation here?
Yeah, I mean, you're spot on with what you're saying as far as the wholesale, inflation and the retail will eventually follow. And there's talk of wholesale inflation up closer to 20% in a lot of different markets and chains. And, we're seeing that in real inflation just increasing month after month right now. But just to give you an idea, I mean, prices in the U.S. consumers jumped 6.2% in October compared with a year earlier. As surging costs of food, gas, and housing left Americans grappling with the highest inflation rate since 1990. It exceeded the 5.4 rate in September and jumped 0.9% month over month, which is pretty wild. Inflation is eroding the strong gains in wages and salaries that have flowed to America's workers in recent months, creating political headaches for the Biden administration, congressional Democrats, and intensifying pressure on the Federal Reserve as it considers how fast to withdraw its efforts to boost the economy. So this is all tied very tightly to what the Fed is doing and what policy is going on right now. Job gains and pay raises have been much healthier during the pandemic recovery than they were after the Great Recession roughly a decade ago. But in contrast to the years that followed that downturn, inflation is now accelerating and diminishing Americans' confidence in the economy, surveys have found. Excluding the volatile food and energy category, so-called poor core prices rose 0.6%, with core prices now at 4.6.
Wait, that's excluding food and energy?
Yeah, and that's at 4.6. So things are going out of control very quickly. And comparing it to after 2008, like we haven't even had the correction or the crash yet, which I know one of the leading world economists right now, Dent, is saying 45 to 55% crash is coming very quickly.
Yeah,
what do you got?
It's right here. This is the subscriber update. So we subscribe to many economist newsletters that they send out, and we pay to get this information, which most people should pay because it's not a lot, but everybody's like, oh, why would I pay for that? Because it'll tell you what to do. So right here, and I'm just showing this on TikTok, you can see this is where we're at. So if you understand a wedge when it comes to looking at any markets, but we're looking at the index, when you look at a wedge, there you are Instagram, there you are everybody else. A wedge, what it's going to do is show you kind of how a stock or how an entire index is trending. And all I can tell you is we are literally about to break through or break down. And if we break down, folks, here's the bad news. If you've been watching Tesla, you see how that sucker is falling? It's because it's up in no man's land. You know, Twitter basically there was a poll where it said he should sell some of his stock. If you think that's why he's selling his stock, you are so fucking blind. Like, it's all planned. He's unloading stock because it's at the highest point ever. Him and Warren Buffett are unloading stocks right now because they understand how the markets work. What do? You buy low, you sell high, and you don't lose money. Now, if Elon were to just dump a whole bunch of Tesla stock, that would basically be an insider trade. It would be front running because he's been pumping it up on Twitter and everything else. So he's pumping the stock up and then he pumps and dumps. That's illegal. It's called front running. He can't do that. So he's brilliant. Steven and I were talking about this. The dude is simply brilliant. And what he does is he basically does a poll. I think, Steven, correct me if I'm wrong. He did a poll on Twitter.
Yes.
Yeah, he did a poll on Twitter asking if he should sell some of his stock, and he did. If you really think that's why he sold his stock, you literally should just keep watching the fake news.
Yeah. So what the story is, you know, there's been some people coming out lately saying, you know, if Elon Musk would sell some of his stock, he could fund all this different world hunger and all this different stuff. And, you know, they're just, you know, basically egging him on. So he came out with a poll on Twitter and was like, if you all think that I should sell 10% of my stock to be able to fund some of these different things, I'll do it. And so he said, no matter what happens with this Twitter poll, I will follow whatever the results are. And he knew damn well who is on Twitter, whose Twitter's users are, and how that poll was going to go. And I truly believe that was a setup just to give him an excuse to cash out when he's at these all-time highs right now without completely crashing the company. Because when the president or the CEO of a company dumps their stocks like that, I mean, 10% is a significant portion. Historically speaking, if that happened, it would completely tank the entire stock and the entire company. So he couldn't do that. And, you know, when you look at what Warren Buffett's doing, which we'll talk about too in a minute, I mean, there's people selling right now, and there's a reason for that.
Yeah. So, you know, and it's like, if you read this, you know, if you were to look at this same article from Harry Dent, and whether you love Harry Dent or don't, it doesn't really make a difference. You know, whether it's Harry Dent or any of the other economists out there, they're all saying the same darn thing. Based on this wedge, the only place that it can fall, if it breaks below this wedge, or what we would call the floor, let's just keep it simple, the floor, if it would break below that, we're looking at about a 54% fall in the index. So, and I'm talking about the S&P 500. So if it goes below this, we are literally looking at falling roughly 54 to 58%. How many of you are prepared with your 401k, with your stock portfolio for a 50% plus drop? Are any of you ready for that? Or am I the only one that can raise my hand and say, bring it on, I'm going to make a shitload of cash because I'm short the S&P. I own different positions that will benefit when the markets go down, including the age-old, boring ass. Your advisor will tell you I'm stupid for saying this, but 20 and 30-year U.S. Treasury bonds. Why in the world would I be buying U.S. Treasury bonds? Well, the same reason banks buy them, the same reason insurance companies buy them, and the same reason that Harry Dent and many others are saying you should buy them. Well, do you want to know why? Well, it's because there's an inverse relationship to the market. When the market goes down, these bonds will go up because it's tied to an inverse relationship to interest rates. When inflation runs out of control up, interest rates have to follow it. Now, I know the government's got themselves in a weird place, and it's not the first time they've ever been here. Japan did the same thing, and many other countries have been there before. We are at this low interest rate cycle. The Fed wants a low interest rate cycle because it's cheaper for them to pay their debt. They can keep those rates on the 10-year, 20-year, and 30-year bonds low, which costs the government more money to go out there and print money and sell their bonds. And also, if any of you have been paying attention, you have noticed that the Fed has decided to start tapering their bond purchasing program, which I believe, correct me if I'm wrong, anybody on TikTok or anywhere else, was about $120 billion a month that they are buying bonds. They're going to start tapering that back, and eventually they won't be buying any bonds. This is normal. That's not a red flag or anything. This is normal, you know, how the Fed controls the economy. But the economy right now is so fragile. is so delicate. Inflation's running out of control, which is going to be followed by deflation. So a lot of people are preparing for inflation, loading up on gold and precious metals. Now that's good if you think inflation is going to run out of control like it did in the 80s, which it might, but I think it's going to be short-lived because remember, inflation is going to be driven by a market going up, the hockey stick, which you're seeing right now. It's happening. All markets, real estate, crypto markets, stock markets, they're all in a bubble, a hockey stick bubble going up and up and up. Well, how can they not? Stephen, how much money has the government printed, since the beginning of COVID? I mean, is it $9 trillion?
That's about 40% of the total US dollars ever created in the history of the country. So
40% of the total US dollars ever created. So, if you guys all remember 2008, that was a big bailout, like the biggest in history. That is nothing compared to this monumental fuck up that the government made by printing all this money to quote unquote, create green energy and create jobs. Listen, I hope I'm wrong about this, but if you all think that the infrastructure bill is going to create a whole bunch of new jobs, folks, you're not actually an employer. You don't own a business because there is nobody that wants to go to work. I can't even get people to show up for an interview for a really cool, high-paying job as a videographer. People don't even show up. They message you. They say, oh, my God, this is cool. Yeah, when can we meet? And then they don't show up. So if you think that the government printing all this money to create these jobs is going to get people back to work, it's not. Until this whole thing deflates, people are still going to sit on the sidelines because they're making money in crypto. How many people do you know, Stephen, that literally didn't have a job? They started day trading, then they found crypto, and now they're all paper rich. And they're like, I'm not going back to work. I'm just going to be a professional trader. Do you know?
I can't tell you how many people I talk to on the phone, and the conversations I have with people being a money mentor is, we talk about retirement, about savings, about investing. And I can't tell you how many people tell me, hey, I have no savings. I've never invested in my life. I've never had a retirement, but I have $100,000 in crypto right now. So I'm doing awesome.
Yeah. So there you go. That's it. So here's the false sense of reality that you all need to wake up to. Okay. And I hate to be the asshole that, is sitting here poking your bruise, telling you that this is what's coming and you don't want to believe it. You're living in a fantasy world. You are literally living in a world that isn't even real. But the cool part is we can gauge where this is going to go because we can look at 1929. Everybody was doing the same thing. They were paper rich. Stephen's got a good article that we're going to hit in a second. They were paper rich because they were trading the tickers. Back then they had these little glass things. It was a ticker thing and it just printed out all the stock quotes. And people were making a ton of money in the stock market. And because they were making a ton of money, a lot of them went to be traders and they were spending all their time doing trading instead of working their job because they were just making so much money. Then all of a sudden one day, boom, sorry, I hope you're up now. It all tanked, and that was the start of the Great Depression. And just so you all think, I know a lot of people that we talk to, Stephen, you hear this, they always say, okay, well, when it happens, I'll get out of the market. Do you all realize how a market crashes? Or do you not remember 2008? Do you not remember COVID? Do you not remember the 80s? Do you not remember the dot-com crash? Or have you just never studied history? Maybe that was that course in school that you just totally hated and you just slept through the whole class. Well, wrong one to sleep through because if you study history, you will understand that the first crash, the first fall in any recessionary start or depressionary start is the worst. Right here, I'm showing it to you. I'm literally showing you what it will look like. Okay, there's where we're at. Look at that big fall. See this big thing right here? That's where the market's going to go. Now, only problem is, and I know you guys can't really see that. It's kind of far away. The only problem is we can't tell you when this is going to happen. But, Stephen, actually pull that article up because I don't want to miss. I tend to go off on these rants because I'm so pissed off that people just can't see what's going on. I don't know what it is, Stephen. We actually freaking care about other people losing everything they've ever worked for. And nobody else seems to give two shits because they're caught in this fantasy world. They're high on this false reality they're living in. Go ahead and talk about this bill.
Well, the reason I bring it up is because 1.2 trillion or whatever, which is, these days doesn't even sound like a lot of money, but in reality, that's a shitload of money, right? And so we're pumping all this money. I mean, infrastructure sounds great, bridge and roads and tunnels and all this stuff. I mean, first off, the states are responsible for the majority of that. The roads in this country are not falling apart. Like, yeah, there's some infrastructure that probably needs some help. But if you look at what's really in this bill, $1.2 trillion, it's a lot of other stuff, right? We always focus on what's the good part, and we forget about this 70, 80% of it that's other stuff. And, so when we are pumping all this money into the economy in an already overinflated economy, I mean, inflation is simply a lack of goods when people want them, right? And that's what causes prices to drive up. So now we're throwing all this money on top. There's still a lack of goods. People are still not going back to work. And then they start looking at, well, how's all this stuff going to pay for? And then the reason I bring this up is because, one of the big things that's in this, and I'll bring up the next article right now, is one of the big things is they're going to start taxing crypto. Now, there was a lot of lobbyists that were going against crypto. So my question for the community as I pull this article up is if crypto does start to get taxed and taxed heavily and really tracked, is that going to give crypto a more legitimate picture, in the mainstream, or is that going to make people want to get out of it because they're not going to want to pay all these crazy capital gain taxes and everything that's involved with buying and selling crypto? So where does it go from here? You know what I mean?
Well, let's just poll the audience here real quick, because we love when the audience gets involved in things. We got TikTok. Someone just said, so if you're in a 401k, what fund is the safest place to shelter it? That's a great question. And I've looked at a lot of 401ks, although we can't give you stock advice or stock tips. What I will tell you is in your selection of limited selection of funds that they give you in your 401k, what you got to be looking for is something that says government bonds or government securities or money markets, or many 401ks will have like a guaranteed interest account. I don't like them, but right now it's better than the alternatives. Most 401ks have gone to the laziest position they can be. And you see all these mutual fund companies from Fidelity to Vanguard to T. Rowe Price coming up with these target date funds. Oh, you're retiring in 2023. Great. Buy the Freedom 2020 or 2030 fund. We'll invest your money in a basket of diversified mutual funds. And then as you get closer to retirement, we'll get more conservative. Do you know what that comes with? I can give you one guess, a big old price tag. The management fees on these retirement funds and these freedom funds are higher than any other fund in your portfolio, maybe rivaled by international funds because they typically have higher expenses. You don't even look at that because I bet you none of you are actually looking at the prospectus that is given to you about the investments. No, you just ask somebody else, well, what should I invest in? Oh, put your money in the S&P 500. What does that asshole know about the markets? Is he an expert? Has he done really well? Has he gone through a recession? Does he know what he's talking about? And is he paid to give this advice? No, you know who he is? He's the person you have coffee with at lunch. He's the person you eat your peanut butter jelly sandwich with. He doesn't know jack squat about the stock market, but you're taking advice from him. Never, ever forget the Kennedy story in 1929. Okay, Kennedy, and you all know of the Kennedys as the presidents and the Kennedy family, but Kennedy Sr. was getting his shoe shined. He was an avid investor, very wealthy man. And he was getting his shoe shined, and the shoe shine boy was giving him stock advice. So Kennedy started thinking to himself, he's like, you know what? If the shoe shine boy is giving me stock advice, maybe it's time to get out, because that means that everybody is buying high because everybody else is plowing in the market. So he got out of the markets, he shorted the markets, and you guys can look up history. Well, today the shoe shine boy is not the one giving you advice. It's the Uber driver, the Lyft driver, the guy you're eating breakfast with. It's people that have no clue about the markets, that don't even research their advice they give you. They just give you useless, dangerous knowledge, and you actually act on it. So for the person asking about their 401k, I would look for the safest place, something that says money market, something that says guaranteed, stable value, something that says government securities or government bonds. You want that, but it's very difficult to find these ultra conservative positions in 401ks. So user 71 something or another, I hope that helps. But the other thing, go ahead, Stephen.
Real fast, Devin just commented on Facebook. He's in a fund, or they're in a fund that's 73% cash and 27% bond right now. So yeah, you're removing the risk of the equity markets. But remember what we opened up with here. Inflation's at 6.5%, and which really means in the real world, inflation is double digits. So if your money's sitting in cash, it means you're losing between 6.5% and 12% right now on your money. So your $100,000 is dropping to like 90 to 85,000. That's not what you want to do. You want your money to grow. So even when you're in a safe spot, how is that safe right now?
Yeah, I mean, like, folks, just kind of look at what I just drew. Like, this is not to scale or anything, but, you know, this is COVID over here, okay? If you guys remember, COVID dropped, and it happened literally in a matter of weeks. You lost, move my chair, you lost most of your money in a matter of weeks. Now, if you lose 30% in the market, I think, what is the math? You got to make back 43% just to get back the 30 you lose. So if you lost 35, this might be more like 49. It's called the drawdown effect, but nobody cares about that. So if you lost 35, you're back. You made it back. Now here's where we're at. Look at this. Okay. This is why Warren Buffett and all these guys are selling. This is what's called a hockey stick. If you've ever seen a hockey stick, it kind of looks like this. Okay. That's your hockey stick. Well, that's what the market looks like. This is where they were at when Kennedy did it. Now, let me ask all of you a question. I want you to be honest with yourself, because I know you're going to lie to me, making me feel like I'm actually teaching you something, but then you're doing the opposite of what we're teaching. Don't worry. I already know you're doing that. Where would you want to buy? Like, where would be the smartest place to buy? And please comment in. We're going to watch all these comments, and we're going to post them if you're coming in from YouTube. Where would you want to buy? Would you rather buy somewhere in this part here? Okay. Is that where you'd want to buy? Or would you want to buy somewhere in this part? Please answer. Would you like to buy the red or the green? How many of you would like to buy the red or the green? Let's see what everybody says. We got a lot of hearts coming in. So what would you all buy? The red. Okay. So yeah, buy high. Oh, there you go. I love it. Who was that? Man, it's coming in so fast. Everybody's saying the red, but one person just said it. Rude Jeff. So RUUDJUFFER on TikTok just came in, and he said exactly the truth. He wasn't lying to me. Every one of you are saying you'd buy the red right here. You're saying, oh yeah, buy low. But what are you actually doing? You're buying here, aren't you? You love the feeling of buying when everything's going up because it feels freaking good. You feel like you're actually buying into like what everybody else is doing. You're listening to your neighbor saying, oh my God, look at how much money. Listen, folks, we talk to hundreds and hundreds of people. And hundreds of people don't lie. They all are buying in the market. They're buying crypto. I see it on Facebook. I see it on TikTok. I see it on Instagram. You guys are all buying. Now, I'm not saying crypto is not a good investment, but it is trending with the market. When the market goes up, crypto goes up. Look around. But everybody loves the feeling of buying high. And when you buy high, what happens next? You sell low. That's what you're going to do. And listen, you don't need to lie to me and tell me you're going to do something different, because 90% of you are going to do exactly that, the opposite of what you should do. How many of you honestly bought when COVID hit, when everything was falling apart and it was scary and we didn't know what the future looked like? We didn't know that the market was going to V and go straight back up. We didn't know that things were going to get back online. We didn't know there was going to be a vaccine. We knew none of this. How many of you actually were like, man, market's crashing. Now is a good time to buy. I want to know how many of you actually bought. Steven, we were buying. Remember, we were talking about it.
And while they're responding to that, think about this, since 2008, so that's 13 years. So if you're 31, 32 years old, your entire adult life, you've never seen a bear market. You've been nothing but a bull market since 08. So the market has done nothing but go up and up and up and up and up. Yeah, we've had a couple real quick little dips like happened in COVID last year, but they recovered very, very quickly. So we've seen this up and up and up and up bull market so very strong. And I just feel like it's a trap. Because if you don't know what can happen, if you've never studied history, if you've never experienced it before, or maybe you're just forgetting it because it's so easy to forget and just look at all the positives. So if you're just constantly going up, your thought is, well, I'm buying high, but it just keeps going higher. So I'll buy high and I'll sell higher. But history tells us that's not what is going to happen.
It's not sustainable. Not at all. And I love it. I'm reading all your comments, folks, and I love it. Like, a lot of people actually did buy the dip. We got a couple of people here who actually were buying Bitcoin during the dip. Now, that was a risky gamble. Who is it? Benjamin. Oh, so there's Benjamin 888. We got to get him on this show. He bought Bitcoin in the dip. That to me was like, holy crap, that's risky. But he did it, and I don't even know what kind of money he made. If he's driving a Lambo, it's fully paid for by the profits he just made on just that one position. So, but he's not buying Lambos. You see, he's probably way smarter. And when we finally meet who this Benjamin guy is, I bet you any money he's probably driving a very modest vehicle, probably a nice one, but modest, because he's taking the money and making it go to work for him. He's not blowing it, because you know what people do? They make money, They go out and they blow that money. You know what that's like? It's like eating your children. Oh, I said it, folks. It's like eating your children. When your money goes to work, I don't care if it's in Bitcoin, the markets, private lending, real estate, when your money's out there working for you, it produces offsprings called interest or gains. If you take those interest or those gains and you spend it, you go waste it, you blow it on foolish things, you are eating your children. Like, that's the way to look at it. You would never eat your children. And I know this sounds morbid, but I'm trying to get it in your head that that's not what you do. Your money works for you. Your money produces offspring, which is interest and dividends and gains. Take that money and make that money go out there and work for you. Then all of a sudden, someday, not tomorrow, not the next year, maybe 5 years at the soonest, you are in a position where your money is working so hard and in so many places that now you can live the life you want to live. I just want all of you to understand one thing. And if any of you are financial advisors on here, I'm not picking on you. I'm not coming down on you. I spent 16 years there, so I know the logic and how you think because I know how your consultants think. If all of you are working with advisors, your advisor is going to tell you the opposite of everything we're telling you. They're going to tell you to put money in the markets. They might tell you, okay, well, we can get a little more conservative, and they're going to move like 10% to bonds or 10% to cash. The safest place right now, and you might disagree, is probably cash or privatized banking policies or U.S. Treasury bonds, because you can't lose in those. They are guaranteed. Oh, but Chris, I'm losing to inflation. Oh, who cares? You're losing 6%. Would you rather lose 6 to inflation in a year or 58% in the markets? Would you rather lose 6% sitting in cash to inflation, or would you rather have your Bitcoin go from wherever it's at, 65, 60, where are we at with Bitcoin, 63 or 65? Wherever we're at, I haven't been looking at it, and have that go down to 20,000. Which one seems more logical? But logic doesn't play anything when FOMO is kicking in. If any of you follow Mikey Taylor, he's an ex-pro skateboarder. Like, I love the guy. We've spent time together. We're money guys. He went from skateboarding into real estate and creating funds and money education. I went from pro snowboarding, into the financial world, into money as well. So we kind of had the same path, but he's talking about the same things. And he says FOMO, fear of missing out, is one of the most dangerous things right now. And you guys are all playing into it. So you just got to be smart. The markets are at an all-time high. We're going to show you in a second an article of Warren Buffett, how much he's selling. Well, you know who else is? Bill Gates is selling. You know who else? Mark Zuckerberg is selling. Okay, you know who else? Ray Dalio is probably selling, but you'll never know because that would definitely be a no-no for him to say he's selling.
Andrew was saying the point is the short at the top, but how do you manage that in a 401k? And one of the things you'll hear us talk about a lot is the problem with a 401k is it's giving up control of your money. You have no control over these. They give you different funds you can invest in and different ETFs and things like that, but you can't actually manage your money. And the money's stuck in there until you're at least 60 years old. And even then you're paying taxes to get it out. So it's one of the reasons why, we like to pivot and look at things like privatized banking and specially designed engineered whole life policies as an alternative, just because of all the benefits of being able to actually control your money. It's why we love, if you're going to use a retirement account and take advantage of retirement benefits as far as taxes go, open a self-directed retirement account where you have complete control of that money, because I can't short the market or really hedge myself at all in a 401k, but in a self-directed retirement account that gives me all the same tax benefits, I'm able to buy puts. I'm able to hedge against it, and I'm able to do everything that I want to do, and even get outside of the stock market and buy real estate and alternative investments with a self-directed account. So that's what we do at Money School, is teach how to take back control of your money. And what Andrew said just is the perfect example of why that's so important to do.
All right, if you like that video, make sure you check out this video right now. And also, don't forget, subscribe to my channel, and don't ever forget to smash that alert button. We'll see you on the next one.